Welcome investors to FiscalVoyage. My name is Felix and today's video is a subscriber request from Ruben. Ruben wanted me to do an analyze on AMT, American Corp or Tower Corp. This company is a real estate investment trust, and he wanted me to do an analysis for this company because he saw a price trigger for his watch list. So thank you, Ruben, for requesting this stock and being a good subscriber to my channel and always commenting and supporting my channel. I appreciate you. So again, if you're new to the channel, make sure to hit that subscribe button and like this video if you like to make money. And also, if you have a particular stock that you would like to see next, leave a comment below with the company name and the ticker symbol. And what I do is do a screenshot of that comment and save it into my list of stocks to evaluate for you guys. So let's get started with this one. Alright, so here's the American Tower Corporation site. The company is a global provider of wireless communication infrastructure, is also a Reit, real estate investment trust. You can see here the company is going for $217.32. It's down now today about 1% down, which is okay, no big deal. Some key metrics I like to look at here is the price to funds from operation at 27, which looks to be pretty high, but we'll go more into detail in that. The dividend rate at $4.82 with a funds from operation of $8, so it looks like the dividend is well covered, and this is forward looking, so very positive there. Yield is low at 2.21%. That's pretty low for a Reit. But some of the good things with this company, American Tower Corporation, you can see here the dividend history. They've been growing dividends for 8 consecutive years, has a 5-year growth rate of 21.9 or 22%. The payout ratio, as we just mentioned, is good coverage here at 60%. REITs tends to have a payout ratio around 80 to 90%. So this payout ratio is very good. So I'm very confident the dividend is very safe. Another thing I like to look at here in Syncing Alpha when I evaluate a company is the dividend yield history. You can see here the 4-year average is at 1.83 and right now at 2.21. So it looks like a good indicator that the company may be undervalued based on the dividend yield. You can see here whenever last time it got up to 2.11 was in March low. So that might be an opportunity to looks like the company may be undervalued based on the dividend yield. And you can see other time period when it had a 2.10 here, 2.12, and things like that. So it looks like a good indicator that the company may be undervalued. So let's go to Morningstar and look at some of the key elements here for American Tower Corp. Morningstar gives it a 2-star rating out of 5. That's an indicator that the company might be a sell or hold area. Some good ratios here: 3-year average revenue growth at 9.4%, so growing revenue over 9%, very positive. Net income growth for the past 3-year average 25%, so that's very positive there. Return on investment trailing 12 months 42%, that's very good. And return on asset 4.6, pretty positive there. It has an economic moat that's narrow. However, Morningstar has a fair value price of $190 and yesterday's closing price at $219. Again, it's down about 1% today, but it looks to be overvalued based on the Morningstar analyst expectations. So let's look at some of the financials here. Price to sell looks pretty high at 12.4. Price to earnings, we don't look at this because it's a REIT, so we like to look at price over funds from operation for REITs. Debt to equity ratio, however, is pretty high, 8.49. I like to see this at 1.5 and lower, so this is pretty high. But because it's a REIT, they tend to have high leverage. However, the positive, they're able to cover the interest, so that's positive there. You like to see this at 2.5 and higher, so we meet that criteria of 3.3. Let's look at some valuation metrics here. Price to sell is higher than the 5-year average, might be an indicator that it might be overvalued. Price to book, however, for REITs are something is a good figure to look at for valuation, and it looks like the current price to book ratio is much higher than the 5-year average, so this might be a good indicator that it might be overvalued as well. PEG looks good here at 2.01 versus 2.07 5-year average. Earnings yield is low. It's higher than the 5-year average, but earnings yield is basically how much, if you were to own the whole company, how much of profit would you get. Some other metrics here. The return on equity percent for the last 12 months is pretty solid at 42% versus 21% for the 5 years. So let's look at the fast graph for this company. First off, let me remove the price. You can see here, American Tower, I'm looking at free cash flow. American Tower Corp has a really good free cash flow history. You can see here they've been growing free cash flow at a double-digit rate. 10%, 17%, 32%, 12, 14, and so on. This year, however, or last year in 2019, it was down negative 1%. And this year, however, they're expected to be up 7% in free cash flow. That's very positive considering all the things that's been going on this year. So that's why I'm very confident in the dividend to being paid out and continue to raise. And one of the key things that makes this company attractive is we saw in Seeking Alpha, the high dividend growth rate. You can see here for the past 7 years, it has a compounded annual growth rate of 22.8%, which is outstanding. If you find a company that's growing dividends every year for 7 years, basically, 22% compounded annually, that's outstanding. So basically, in what, 5 years, the dividend has doubled. So that's outstanding. I really like that. That's very great. And if we put the price chart here, the company's been doing outstanding. If you were to purchase shares, say around here in 2015 at $94 with a price to funds from operation around 20 to yesterday's closing price, you've been averaging 17.7% annual rate of return, which is really good for this company, for a REIT, and a high quality REIT at that. You saw how the interest coverage is covered. Again, they have a high debt to equity ratio, and you can see here as well, 85% long-term debt to cap. So that is pretty high, but I'm not concerned with it because interest coverage is covered and they have really good cash flow. S&P credit is BBB minus, which is investment grade, so that's positive there. But some things I don't like right now, you can see here, based on the fast graph, the company does look overvalued. And even in Morningstar, it showed that it was overvalued. It gave it a 2-star rating out of 5. So the company, American Tower Corp, does look to be overvalued. I personally would like to see this company in a ratio, a PE or a blended price to adjusted funds from operation of around 20 or 18. 18 or 20, I think, is a good buying opportunity. And anything lower than that, outstanding buying opportunity. And you can see here in this chart that American Tower did come under that 20 price to adjusted fund from operation. You can see here in 2017 it had around 19. It's gotten as low as 18 or 17. You can see here 17 as well, 17.8, almost 18. So if you get it at a PE or price from adjusted fund from operation of 18 or 19, I think this company would present a great buying opportunity. But right now it looks to be overvalued. If we shorten this time period to around 4 years, you can see here the market tends to average this company around a 22. And right now it has from yesterday's closing price, a 26. So that's $219.41, and right now it's $217. So I think there's still potential for this company to go down further. High quality company, I would definitely love to own this company in my portfolio as another REIT in my portfolio. Right now I have 4 different kind of REITs, but I think this company is very solid company, high quality company, but the valuation I'm not too fond of. If you look at forecasting, you can see here analysts are expecting 15 to 16% growth in adjusted funds from operation, which is outstanding. So they're going to continue growing. Of course, with the 5G and everything, the Internet of Things, everything is going to be connected wirelessly. So for their location to build up antenna is going to be even more valuable. And and the company is going to pay to have those antennas there. Pay their monthly bills to rent out that space. But you can see here, if we go to the normal multiple, and we do the 5-year multiple, you can see it does look overvalued with a PE of 26. And if it were revert back to the mean, you can have a potential loss annual rate of return loss of almost 1%. So that's not attractive. I don't see this company very appealing right now. Overall, the company is very solid, but I don't like the valuation for this company. So that's my thoughts on American Tower Corp. Solid company. I personally would love to own this stock or buy shares of this company and personally own it in my portfolio. But right now I think it's overvalued. I'll just wait until the price to adjusted funds from operation is around 18 or 19 before I would consider buying shares. I think this is a solid company, just not at the right price. So again, if you guys want me to analyze a stock that you are interested in or looking to purchase, leave a comment below in the comment section and let me know what stock, the ticker symbol, and also what's your thoughts on American Tower Corp. You know, do you personally own it? Have you heard of this company? You know, what are your thoughts now after watching this video? Let me know in the comments below what you think about this company. Again, if you're new to the channel, make sure to hit that subscribe button, and if you like to make money, hit that like button, and I'll see you guys in tomorrow's video.